getting good vibrations on the floor. And I think this weekend is likely to see us conclude the debate and voting on this measure.
As always, there are risks to any outlook, and I do believe that the risks to my outlook for inflation are to the upside.
I'd expect something between 2.5% and 3% in 2022. I think it's going to be more persistent.
This is Bloomberg Surveillance, Early Edition.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London. We're just gone 9 a.m. Here's what's coming up on today's program. Ready to taper. Fed Vice Chair Clarida says a decision on paring bond buying could come this year with a rate hike in 2023. The Bank of England meets with a focus on QE and inflation views as MPC member Michael Saunders is likely to back an immediate end of stimulus. We speak later with Andrew Bailey. And China imposes new travel and movement restrictions as Delta variant reaches half the country. Hong Kong imposes a quarantine on travelers from the mainland. Well, good morning. Happy Thursday. It is another record here in these European equity markets. We're moving up about 0.25%. Their earnings continue to flow in. We have that BOE decision. Will they shift more hawkish? How will the language change? Certainly those ideas pushing up your cable rate today at 139.22. But those last two assets I have on the board there with the yen as well as oil, we're starting to see some of the growth concerns peek through. We're seeing a weaker yen before versus the dollar. But those levels that we're at in both the yen and oil, WTI below $70 a barrel, again, peaking up ever so slightly. Are people fleeing to these havens if they are concerned that growth won't be on track if coronavirus continues to spread, especially in China? Now let's move over to the U.S., where the Fed's taper course is growing. Vice Chair Richard Clarida says the central bank is on course to begin paring bond purchases later this year, then with a rate hike penciled in for 2023. He painted an upbeat outlook in his comments.
If the outlook for inflation and outlook for unemployment I summarized earlier turn out to be the actual outcomes for inflation and unemployment realized over the forecast horizon, then I do believe that these three necessary conditions for raising the target range for the funds rate will have been met by year-end 2022.
We've heard that view echoed recently by San Francisco Fed President Mary Daly and, of course, James Bullard of the St. Louis Fed. They both see tapering at the end of this year or early next year. Let's get more on this. We're joined now by Mike Bell, Global Market Strategist at JPMorgan Asset Management. Mike, good morning to you. Thank you so much for joining us. One of the things that struck me after we heard from Clarida, after Mary Daly, is still this persistent low level in the yield, whether it be in the U.S. or the entirety of the bund curve less than zero. Is the market underestimating the impact that a strong jobs number tomorrow could have when it comes to moving central bank policy?
Possibly. I think that the move you've seen in bond yields over the last few months has been driven by the fact that you've had quite a lot of buying, largely from pension funds. If you look at pension funds, their funded status improved because equities have done so well. So we think that's led to some de-risking, and that's been supportive for treasuries. But as we look ahead into the second half of the year, we do think that the likelihood is that certainly it may not come on Friday, but in future job prints, we think we're going to get strong job growth once the unemployment benefits become less of a factor there. And that should drive bond yields higher, particularly real yields should go higher.
How much, though, is the supply picture factoring into this? The Treasury saying that they might see a smaller auction size. Does a lot of this have to do with maybe money chasing too few assets?
Yeah, I think that's exactly what you've been seeing, right? So there hasn't needed to be a lot of issuance because the Treasury have been running down their account. And then you've had large purchases, of course, from the Fed, but we're talking about tapering, so that will go away eventually. And of course, as we say, from people like pension funds. I think the other thing is if you look at some of the hedge funds, it looks like some of them got caught offside and have had to unwind some of their short positions. So all of those factors, I think, have been supportive for the rally that we've seen in bond yields over the last few months. But as I say, from here, we think once those unemployment benefits are no longer there and causing people to not seek work, we think you're going to see a pretty strong recovery in the labor market in line with what people like Clarida were saying. So we get back to full employment probably by the end of next year. And in that kind of time horizon, we think that even though the market's probably right in terms of pricing the timing of the first rate hike, the pace of rate hikes after that is probably going to be faster than the market currently thinks. And as that becomes clearer, we think you should see bond yields move higher.
I do have to wonder in that scenario what happens to equity markets, because in the last decade, when we started to get an easing of QE, equity markets still held up well. Of course, they were much cheaper than they are now. Can equities continue their upward momentum, or does gravity catch up with them if, as you say, the pace of rate hikes and tapering starts to pick up?
I think you're entirely right. If you look at the past, of course, what happened is that rising bond yields weren't a problem for equity markets at all. But the key difference this time around is that some of the growth stocks are much, much more expensive than they were in the past. So I think some of those growth stocks could potentially be vulnerable to a move higher in bond yields. On the other hand, some of the cheaper stocks, some of the sort of value parts of the market, financials in particular, tend to have a very good correlation with bond yields. So we've seen financials underperforming as 10-year Treasury yields fell in the last few months. If we're right that Treasury yields move higher from here, then we think that sectors like financials and value should outperform.
Mike, we have much more to dig through. You're going to stick around with us. That's Mike Bell from JPMorgan Asset Management. Now, coming up, we turn to the UK and its Bank of England decision day. The question all investors will be asking themselves, will the BOE be the first to the taper trigger? We're live from Threadneedle Street. Up next, this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now, with the Bank of England decision today, one question will be which central bank will be the first to the taper trigger. BOE policymakers are likely to favor patience. Michael Saunders is set to be a lone dissenting voice, calling for an immediate end to the bond buying program. Outside the Bank of England on Threadneedle Street is our UK economy reporter, Lizzie Burden. So, Lizzie, set the scene for us. What are we expecting out of the BOE today?
Well, the doves are set to dominate today, Danny. We're expecting a unanimous vote to keep interest rates on hold at 0.1% and a 7-to-1 split on bond buying. Michael Saunders, as you say, is likely to be the sole dissenter in favour of ending stimulus early. He could be joined by Dave Ramsden, who's warned that inflation could reach 4% this year. Both of them will cite the spike in inflation and the strength of the recovery that's been boosted by the vaccine rollout. But they'll be outnumbered by the rest of the doves on the committee, who will point to the idea that the inflation spike will only be temporary. The 1.9 million people who were still on furlough at the end of June, when much of the economy was already open, the real-time indicators showing that Freedom Day was a flop. People don't want to go back to the office for fear of catching the Delta variant of the coronavirus or getting pinged by the NHS track and trace app. And this idea that the last miles of the recovery really are going to be the hardest because all the low-hanging fruit have already been picked. So caution's likely to be the watchword out of the Bank of England today, in contrast to places like Norway, New Zealand, which are already talking about rate hikes. What will be interesting as well is where the Bank of England sees inflation peaking in its forecasts.
Okay, so no policy move. The focus will be on inflation. Where does it peak? What about one of the other big questions of how the BOE will eventually withdraw stimulus? Could we get any more details on that, Lizzie?
This is the bit that could really shake markets. So the current guidance from the bank is that it won't consider shrinking the balance sheet until the key rate reaches 1.5%. But it would now be possible to lower the floor because today the bank is set to announce that negative interest rates will be formally integrated into its policy toolkit. So if they do announce that and flip the order, making balance sheet retrenchment the primary tool in any kind of tightening, you could see economists pushing back when they see the first post-pandemic rate hike. So at the moment, markets are pricing in 13 basis points of hikes by mid-2022. That could change today.
Lizzie, thanks so much. We've got about 3 hours until the BOE decision. Lizzie Burden will stay on top of that for us. Thanks again. And make sure to catch our interview with the Bank of England Governor Andrew Bailey. We'll be bringing you that this afternoon, and that will be following the Bank of England decision. Still with us to talk all things UK is Mike Bell from JPMorgan Asset Management. So, Mike, is this fair, this idea that maybe we'll have a one lone dissenting, more hawkish policy member, but besides that, it's just dovishness all around from the BOE?
We certainly think the majority are going to be in favour of continuing with the asset purchases. We do think, as you were discussing just there, that there may be some change to the guidance around when we get an eventual halt to reinvestment of flows, but we think that that's not going to be until after the first rate hike.
So UK stocks at the moment this year up about 10%, Mike. Stocks 600, all of Europe up about 18%. So pretty sizable lag from UK stocks. What do you do with the region in the equity market right now?
Well, it's been very unloved, but we like it. We think if you look at UK equities relative to global equities, the PE discount is very large compared with history. So the region's cheap, and people are seeing that. So you're seeing a lot of M&A within the UK at the moment, as both private equity and international buyers swoop in on some of these cheap companies, and that's supporting some of the targets that are getting taken out there. But we also think that the earnings outlook will recover. We're not that concerned around the Delta variant. We think that you're seeing cases seem to be leveling off and hospitalizations are not rising dramatically. So we think that actually the outlook for the UK economy and therefore equity markets is pretty good.
I mean, on that note, we, of course, had the UK overnight opening up traveling between England and places like France, the UAE, India, some of the restrictions changing. I'm looking at some of these airline prices, Mike, not a ton of reaction here. That sector specifically, is that a sector that you would be buying, or is there just too much volatility depending on, you know, what the Delta case is or these sorts of things?
I mean, it's obviously one where there's upside if things pan out very well on travel, but I do think that travel is still the area of uncertainty. So it's kind of one for the brave, and I wouldn't have too large positions in it. I think more broadly speaking, of course, so if you look at the UK equity market, it's a very small part of the UK equity market, those travel-focused stocks. So for the broader market, we think that the travel restrictions are not a hindrance.
One for the brave. Sometimes you just got to be brave, Mike. You have to be brave. All right, so UK equities a little bit underpriced, travel especially. Can I take you across the Atlantic to a part of the market that is perhaps not underpriced, and that would be big tech. We had a little bit of disappointment from some of the big tech earnings at the moment. Are valuations justified at this moment? Will momentum continue to lift big tech higher?
I think the valuations are justified if bond yields stay low. The risk to me is that bond yields are likely to rise, and then the valuation on some of these growth stocks perhaps looks a little stretched. Now, I don't think we're in a dot-com type bubble. I think that many of these companies are extremely profitable, and that what's likely to happen is that the PE will come down a bit, but largely because of rising earnings over the next couple of years. So it may just mean that those more expensive growth stocks end up going up by less than some of the cheaper stocks, which benefit from a rise in bond yields.
I mean, it is really remarkable when you look at the U.S. market. I think it's 187 days that it's been since the S&P 500 has seen a drop of 5% or more. But, Mike, we're heading into the summer. People step away from their desk. They go on vacations. There's less volume in these markets. Are you preparing your clients for more volatility over these summer months?
Yeah, we titled our mid-year outlook still up but bumpier. So would it be surprising to see a bit of a bump in equity markets at some point over the summer? Definitely not. But we do think that the outlook over the next 6 to 12 months is for equity markets to move higher. If you look at earnings, for example, Q2 earnings massively beat relative to forecasts just prior to the earnings season beginning. But if you look at, say, Q3 and Q4 earnings expectations, they haven't been revised up enough yet, we don't think, to reflect the massive beats you've seen on Q2. So we think that as we get into Q3 and Q4, there's still room for earnings to be revised significantly up.
Mike, really great to get your input today. As always, that's Mike Bell, Global Market Strategist at JPMorgan Asset Management. Thanks again for joining us. Now let's get over to the First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Danny. Fully vaccinated visitors arriving in England from France will no longer have to isolate for 10 days, putting it in the same category as most other European nations. The UK also eased rules for arrivals from India, the UAE and Qatar, moving them off the high-risk red list. 6 other European countries, including Germany, were added to the green list, which requires no self-isolation. Now, scores of people on the Greek island of Evia are reported to have been forced to flee by boat as a wildfire spread rapidly. Greece has been grappling with the worst heat wave in some 40 years, with firefighters struggling to contain dozens of blazes across the country. Brazil's central bank has lifted its rate by 1 percentage point, its biggest interest rate hike since 2003. It comes as economic recovery and a severe drought raise expectations that inflation will remain above target next year, driven by rising food prices and electricity prices. Borrowing costs are expected to rise to 7% by December. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Danny.
Leanne, thanks so much. Now, coming up, China hunkers down as the Delta variant reaches nearly half of the country. We'll get more on new travel restrictions coming into effect across the nation. This is Bloomberg.
Let me say only that we do not believe that the Delta variant will lead to another broader-based lockdown in important countries or regions, so that is not part of our forecast.
That was Merck CFO talking about the impact of the Delta variant on the company's outlook. Now let's stick with the Delta variant and the spread of COVID, where China has imposed new travel restrictions across the nation. That's as an outbreak driven by that variant has risen to over 500 symptomatic cases scattered across 15 provinces and municipalities. Let's get more from Bloomberg Health reporter Michelle Cortez. Michelle, how serious and widespread is this outbreak at the moment in China?
This is the widest outbreak, the broadest outbreak in China since the pandemic began in late 2019. So it is a very serious situation there. As you point out, however, it is only about 500 cases, a little bit more, and they are working very quickly to try to lock everything down. Even though they do have a high vaccination rate, they're not fooling around. They don't take this lightly in China. So we're seeing lockdowns, we're seeing quarantines, we're seeing massive testing, and they're trying to get it under control there.
Of course, whenever we have lockdowns and travel restrictions, it always sort of lends itself to concern about what that means for the economy. Have we yet seen or can get hints of the evidence of what is going to happen to the economy and the social impact of all of this?
We are already getting reports from analysts, people who are watching the GDP growth in China. They're expecting the biggest hit to come in the third quarter, of course, because these lockdowns are happening now. We're seeing airline flights decline by about 10%. Cross-city travel on buses and trains are being shut down. Kids are being asked not to return to school right away. So we're seeing a lot of impact. Not only that, they're closing down tourist sites and canceling events. So about, is about a 7 percentage point or a 0.7 percentage point hit to GDP expected in the third quarter, dropping it down from about, 6.4% growth to about, 5.1% growth in the third quarter, a smaller hit in the fourth quarter. Overall growth for the economy expected to drop down from 8.9% to 8.2%. So a real hit, but less than would have been expected a year ago.
Michelle, you mentioned before that this is all happening despite high vaccination rates. Why is that? Why isn't a higher vaccination rate helping China to prevent locking down as much as they have?
Well, China is taking this virus very seriously. Remember, they only have 800 cases. I mean, they only have 500 cases, and they're locking down, regions across the entire country. So that's what's happening here. Also, however, they have in Beijing, for example, greater than 80% vaccination. So why are we seeing these breakthrough infections? And the answer is partly because their vaccinations are just less potent than some of those that we've been using in the West. Now, they are really reducing hospitalizations and death rates, so that's good news. But we are still getting some of these breakthrough infections, and we'll expect to get more of them as people are further out from their vaccination and the protection wanes.
Michelle, thanks so much for bringing us the latest on that. That's Michelle Cortez, Bloomberg's health reporter. Now coming up, the world's largest producer of insulin is pinning its hopes on a new weight loss medication to diversify its business. We'll be speaking to the CEO of Novo Nordisk next. This is Bloomberg. Ready to taper, Fed Vice Chair Clarida says a decision on paring bond buying could come this year, with a rate hike in 2023. The Bank of England meets with a focus on QE and inflation views, as MPC member Michael Saunders is likely to back an immediate end of stimulus. We speak later with Andrew Bailey. And China imposes new travel and movement restrictions as the Delta variant reaches half the country. Hong Kong imposes a quarantine on travelers from the mainland. Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Dani Berger in London, where it's just gone 9:30 a.m. So it's another all-time record when it comes to European equities. In the U.S., it's not as heavy of an earnings day. Of course, we're waiting for jobs numbers, but there's still a few pre-market movers that stick out. You have Robinhood moving lower by about 1.5%. It has had a remarkable rally. Yesterday, up 50%, finally getting it taken above its IPO price. A lot of retail trading, an endorsement from Cathie Wood, all of that attributed to some of those gains. Now, Novavax, also one of the top gainers in the U.S. pre-market, up 4%. The EU signing a deal for 200 million doses of their COVID vaccine. It will be 100 million doses initially, and then an option for 100 million doses in 2023. Finally, Uber, falling pre-market. They had their earnings after the bell yesterday. They were racking up losses. They're trying to ease some of the driving shortage. That, of course, means that you have more wages to pay out. There are doubts as well about the reliability of their labor, their longer-term model there. So their shares declined post-market 4% yesterday. So a pretty equal match of that pre-market so far today, down about 3.8%. Well, let's continue with that earnings story. And it was a rare miss. GM shares tumbled by the most in more than a year after yesterday profit came in below estimates. The company also struck a cautious tone about future earnings. CEO Mary Barra spoke to Bloomberg's David Weston.
We increased our guidance for the full year, so I think that shows our confidence that we're going to continue to perform on top of an exceptionally strong H1. But we'll be very fluid. Right now, we work, and it's on a daily for the team that's working on it, but weekly from a leadership team. We're looking at making sure we understand the semiconductor situation, and we're allocating chips to our highest demand to take care of our customers, and also the vehicles that are in plants that are capacity constrained. And that is especially our full-size trucks and SUVs. So you'll see us continue to do that. There is a lot of, growing uncertainty because of the Delta variant. We've seen an impact in Malaysia, and we've mapped it out in detail. And so, we're working to share our safety protocols because we have the experience to say when people follow those protocols, they can be in their manufacturing operations, or whether it's design or R&D, they can do that safely. So we're going to continue to share that, work with our tier ones and all the way down to our tier fours to make sure they have that benefit, and then we'll just keep maximizing production.
So, Mary, I'm glad you brought up the Delta variant because we're all trying to come to terms with it, a very uncertain development here. Give us a sense of what you think it might mean for General Motors. You just mentioned semiconductors more broadly in your manufacturing.
Well, we did announce to our teams yesterday, and it started today, that we're reinstituting the mandatory mask policy at all of our sites because we know when people wear masks and follow the appropriate social distancing and the sanitizing recommendations, people can be safe at work. And so I think we're in a very different position than we were over a year ago when really we weren't sure. We know the protocols work, so we're going to be applying those. And again, as we all leverage all the learnings we've had over the last 15 months, I think that's going to put us in a better position for H2. But we are monitoring carefully, and the team will continue to adjust.
That was GM CEO Mary Barra. Now, sticking with earnings, Novo Nordisk has raised its profit and sales forecast for the year, reflecting high demand for the Danish drug maker's new obesity medication. Forecast for operating profit growth increased to as much as 12% as initial demand for the obesity drug in the U.S. exceeds supply. Now, Novo's core diabetes medicine also saw increased revenue, outweighing weakness in insulin sales. We're joined now by the CEO of Novo Nordisk, Lars Fruergaard Jorgensen. Lars, thanks so much for joining us this morning. So you had your earnings out yesterday, strong numbers, your shares rallied to all-time highs, and of course, that was accompanied by an upgrade in your forecast. What really allowed you in this results to upgrade that forecast in your outlook?
Yeah, thanks for having me. And you're right, we are seeing a very, very strong business momentum right now. We see that across all our geographies that we are in strong growth territory, and also across all our therapeutic areas. You mentioned some diabetes growing very strongly, both our insulin business, but increasingly we see that is the growth from the GLP-1 based. That's a molecule class called GLP-1s that's carrying through globally. And as you mentioned, we also see a very strong dynamics in the obesity franchise, where in our first half year earnings, we have very, very little contribution from the newly launched product, Wegovy. So it's basically our existing product, Saxenda, that is growing significantly now again, coming out of the pandemic.
Well, of course, you said in your earnings as well that demand for Wegovy is very strong. So strong, in fact, that demand is outstripping supply. How long do you foresee that lasting? When can supply start to catch up with all the demand out there?
Well, we are, as we launch new products, ramping up manufacturing. So we have good plans in place to make sure that we can ramp up and supply the market. The demand we have seen in the market has been very, very strong. So I think there is an initial uptake here based on patients who have been waiting to get the new very efficacious medicine, delivering weight loss to the tune of 17-18%. That's never been seen before in terms of medical intervention. So I think we'll see a gradually more normalized uptake. And we have, we know how to scale up manufacturing. So we are on top of that, and we'll make sure that we get the products out to the patients.
So beyond Wegovy, in general, a lot of industries, a lot of companies have seen a lot of supply chain issues, a lot of pricing pressures. Is there anywhere that you are seeing these effects as well hit your margins?
Well, we rely on raw materials to a very limited degree. So it's basically our manufacturing processes that turns, relative inexpensive raw materials into the medicines we sell. But there are examples in the market where the rush to produce vaccines creates shortages in certain components. And we also see that the global distribution chains are very heated. So we see quite expensive distribution means right now. But again, the cost of the goods we produce is relatively, modest. So it's not something that's hitting our margin significantly.
What about something like research, development, and marketing? What do costs look like around there?
Yeah, so we are in a launch mode right now. We're launching a number of products. So we actually see that we are investing more into our business than it's growing. So we saw in the first half year that sales grew by 12%. But profit grew by 9%. So we are investing into our business, both to sell the fantastic products we are launching, but also to make sure that we have, the innovation that we're going to live from, 10, 20 years from now. So we have made a couple of business development deals, and we are also entering clinical trials with, more than 40,000 patients, more than ever in the history of the company. So we're investing a lot into the business, but we also see that the momentum is picking up, and we have stronger growth than we have ever had in the company.
Lars, really in the beginning of the pandemic, we saw a lot of elective medicines and specifically for Novo Nordisk, a diabetes treatment dropping off. Of course, that started to normalize as the pandemic progressed. But I'm wondering, with the rise in cases specifically tied to the Delta variant, are you seeing any of that history repeat itself?
Yeah, what we see right now is that, the pull for diabetes medicine is constant, because if you live with diabetes, you need your treatment. It's life-saving. But when we launched new products, it was difficult for us to get to physicians to talk about the benefits of the new products, and also the flow of patients to physicians to start new treatment was lower. So we have seen a slow uptake of our launch products, but in our total business, we see a constant pull. We spoke about obesity. Less people seek treatment for obesity when there's a lockdown. But now we see that as markets open up, there's actually, the flow of patients is coming back, and we see very, very strong demand for obesity treatments. Also in our biopharm business, we saw a decline under the pandemic, and now that is coming back. So I think largely, despite the fact that there's a Delta variant, we have found ways to maneuver around. And as we just heard from the prior speaker, we know how to protect ourselves. So I think the impact will be more modest compared to what we saw in the first couple of rounds of the pandemic.
Okay, it of course is not just the Delta variant. We worry about other variants as well. Do you think that kind of idea expands really just for the rest of the pandemic? Do you not see any more rising in cases than affecting your outlook?
I don't think we'll see, massive impact on our outlook. But I think we have to realize that as human beings, we have to live with COVID-19 also in the future. And it's really important that we drive the vaccination across the world and make sure that we get, herd immunity established, so we can reduce the number of new variants popping up. And this is really a global issue and not just, a country by country issue. We have to stand together and solve that together.
Lars, before I let you go, I want to circle back to your diabetes medicine. You noted that it wasn't necessarily Wegovy contributing to this corner, but your existing one, of course, Wegovy getting approval in the U.S. Do you plan to take that to other markets as well, where, of course, you already have a successful obesity medication?
Yes, so we see very, very strong uptake in the US, and we have submitted Wegovy also in Europe. So we expect an approval around the turn of the year. And we actually saw on our prior product, Saxenda, that did very, very well outside of the US. So we have high expectations also for what Wegovy can do outside the US. We have double up in terms of weight loss, and we price it more or less at the same price as the prior generation, which delivered, half. So, we think this can mobilize patients to seek treatment. It can get physicians to prescribe Wegovy. And we also think the value we bring for healthcare systems in terms of preventing diabetes, cardiovascular disease, a number of cancers linked to obesity is one that makes it a very meaningful investment to actually get people reimbursed and on obesity medicines.
Lars, unfortunately, we have to leave it there. Thanks so much for joining us this morning. That's Lars Fruergaard, Jorgensen, CEO of Novo Nordisk. Thanks again for joining us. Now, coming up, Robinhood roars back. A retail investor frenzy sends shares in the trading platform soaring. We'll discuss what's driving the moves next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Let's get your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Danny. WPP has beat analyst estimates for revenue growth, raised its expectations for the year, and increased its dividend. The world's largest advertising agency says like-for-like revenue, less pass-through costs, rose 19.3% in the second quarter from a year earlier. WPP's chief executive says the business has returned to 2019 levels in 2021. Now that's a year ahead of plan. Rolls-Royce has posted a surprise profit in the first half. The London-based jet maker reported an adjusted operating profit of £307 million. Analysts had actually forecast a loss. Meanwhile, the company says it's nearing a sale of its ITP Aero division to a group led by Bain Capital, ending a months-long battle for the Spanish business. And Unilever is said to have already started looking for potential suitors for a large part of its tea business. Sources say the sale could fetch up to $5.6 billion, and first-round bids are expected in September. We are told its tea units in India and Indonesia are indeed excluded. Last month, the UK-listed consumer group said it was considering an IPO for a partnership for its tea business. And that's your Bloomberg Business Flash. Danny.
Leanne, thank you so much. Leanne Garen's here in London. Now let's go to the meme stock world, where Robinhood is fulfilling what some saw as truly its inevitable fate. From broker of meme stocks to a meme stock itself. Just a week after flopping in its IPO, and Robinhood shares have surged as much as 82% in the last two sessions. The rally is being powered by the very same people that its trading app enables. That's, of course, retail and traders. Let's get more from Bloomberg cross-asset reporter Joanna Ossinger. So, Joanna, I feel like kind of the head-scratcher here isn't necessarily that Robinhood becomes a meme stock, because, as you're saying, maybe that's just inevitable. But it didn't happen when it IPO'd. Why all of a sudden this interest now?
Hey, Danny, that's exactly right. It's so strange. Usually you see that big pop right at the beginning, like with Coinbase or DD, but this is happening slowly. There wasn't that much interest at first, and now all of a sudden retail traders are catching on. But that's after Cathie Wood bought in. That's after people like Jim Cramer have said that they're into it. And so retail traders all of a sudden have decided that they're really into it as well.
So, we kind of typically see the same playbook. We see, tons of call options, short-dated call options, that kind of thing. Is it the same case here, Joanna, in terms of what's driving Robinhood higher?
That is helping. There were a ton of $70 call options that were done on the first day that you could do options, which was yesterday. So that probably is helping. The stock closed right around 70. There weren't a ton of really high-priced options, but there was huge options activity. It was actually the second biggest options activity volume after Facebook in terms of options trading on a first day from an IPO.
Okay, so a lot of interest then clearly from the retail crowd in Robinhood. What about more generally in this market? I mean, there had been this idea that things open up, people can go on vacation, they're going back into the office. There wouldn't be as much retail-type driven rallies like we've seen. If we put Robinhood aside for a moment, has that been the case? Are retail traders pulling back from this market?
They've been on and off. There are some things where they've pulled back. You haven't seen too many more, say, GameStops, AMCs, but they've moved into things like crypto, and they're doing this with Robinhood. So it is still popping up, right? And we are seeing the Delta variant moving through things. So while we have some fall off sometimes in the retail interest, it's still hanging in there.
Joanna, thanks so much for the update. Joanna Ossinger, who, of course, I should say, is also our crypto czar, among many other things. Now, global food prices fall for a second month, but meal costs extend their rally to multi-year highs. Up next, we're going to talk about food inflation, of course, a huge factor into general inflation, something this market cares a whole lot about. This is Bloomberg.
Challenge. I think it's a lot of different factors in it. Certainly the stimulus support had some element, but if I ask the franchisees, okay, so September, is everything going to be good? Once the stimulus rolls off, they'll say, well, no, there are other things going on. So I think, there's a variety of things at play, but it has certainly been a challenge for us on staffing at the restaurants. And it's putting pressure on wages, which is what you see in any kind of capitalist system. So employers like McDonald's are now having to pay more on wages.
McDonald's CEO there on the staffing issues facing his business. You can catch that full conversation on tonight's episode of the David Rubenstein Show, Peer-to-Peer Conversations. That's, of course, at 7 p.m. London time. Now, a quick check for you on these markets. Stock 600 continuing to hit all-time highs. We're here in the midst of earnings season. That's really helping to fuel some of these gains. So we're up about 0.4% so far this morning. Again, this is the second day in a row that we are seeing all-time highs on this market. Exuberance continuing. Technology, the highest moving sector today that's carrying us there. Basic resources lower today. Now, we're also seeing a stronger cable rate. That's at 139.12. BOE decision coming in about 2 hours. Will they tilt more hawkish? That could drive some of the gains in sterling. We're talking with Kit Jukes of SocGen earlier today, who said that today's decision would be a good time to get on your long sterling positions as well. We're also seeing a little bit of weakness in oil, as well as fears about global growth really weigh on it. And of course, within that global growth story, inflation and food inflation is very important. Global food costs continue their retreat from a 9-year high. United Nations gauge of food prices dropped for the second month, pointing to some relief for consumers and, of course, easing inflation pressures. Joining us now is Bloomberg's agriculture reporter, Megan Durrison. Megan, so what drove prices lower this month?
Yeah, Danny, that's right. So the index is down for a second month in a row now. It's still pretty close to a 9-year high, but is giving some relief to shoppers around the world. We're getting close to the time of year when the Northern Hemisphere countries are going to be harvesting grain. That's going to help replenish supplies that have been a bit stretched over the past year. Similar situation for the oilseed markets. And FAO mentioned for commodities like rice, we're seeing a trade slowdown partially due to the spike in freight and shipping costs around the world.
Megan, I do have to say, if you look at this index over a longer period of time, it still looks really remarkable. It's up about 30% year over year. So even with the drop in this month and prior months, is that food inflation concern? Is it still relevant for governments?
Yes, certainly. So we've seen just in the past couple of weeks, for example, the grain trade, we watch crop tenders pretty closely, and quite a few countries have either canceled tenders or bought quite a bit less than expected. This is the time of year when they usually count on, kind of a flurry of freshly harvested grains to be making purchases affordable. But this year, prices are still quite historically high. And we've also seen countries like Egypt, for example. The president this week called for a potential hike in the cost of subsidized bread that they have in the country for citizens. So, yeah, this is all combining. It's certainly something that a lot of governments and officials still talking about.
What about the forecast? How do we think that this will play out for the rest of the year?
Yeah, so weather is still going to be pretty critical in the next few months. Just recently, we've seen for a staple like wheat, there's been flooding, there's been drought, there's been heat waves hitting a lot of the major producers. So that's all kind of combining to trim production forecasts. How that plays out will definitely have a bearing on price and also demand in some of the key buyers like China, and whether that will still stay hot. That's going to be a big factor for food prices going
forward.
Megan,
thanks for bringing us this, a really important story. That's our Bloomberg agriculture reporter, Megan Durrison. Now, that wraps it up for us here at Bloomberg Surveillance Early Edition for the first hour, but stick around. It'll continue in the next hour. Matt Miller and Kailey Leinz will be joining me out of New York as we continue to see a European equity market very buoyant at all-time highs yet again. This is Bloomberg.
We're getting good vibrations on the floor. And I think this weekend is likely to see us conclude the debate and voting on this measure.
As always, there are risks to any outlook, and I do believe that the risks to my outlook for inflation are to the upside.
I'd expect something between 2.5% and 3% in 2022. I think it's going to be more persistent.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Thursday, August 5th. Our top stories today: central banks and growth in the U.S. and the U.K. They want to pull back on massive support while keeping the economy humming. Tale of two countries. China is imposing new restrictions on travel while the UK is opening its doors a little wider. And meet your latest meme stock. The ingredients that make for frenzied trading are all there for Robinhood. I'm Danny Berger in London with Matt Miller and Kailey Leinz, both in New York. Francine Lacqua is off this week. And we have some breaking lines just crossing the terminal to bring you. President Joe Biden is planning to call for half of all vehicles sold in the U.S. to be emission-free by the end of the decade. So that's by 2030. He's going to unveil the goal at a White House event today. It's going to include representatives of some of the major Detroit automakers and the United Automobile Workers Union. So look for Ford, GM, Stellantis. We're going to head to Washington in a few minutes with our Jack Fitzpatrick to get more on Biden's ambitious goal for automakers. Of course, Kailey, that infrastructure all sort of in the mix here, but I have to wonder, does the market care or are we just waiting for jobs? How many hours is it again until we get the jobs report?
Oh God, you're making me do quick math on live television, Danny. I think it's something like 27 and a half, something like that.
Right.
But yes, you are right.
We
are all just waiting for the jobs report. And it was a mixed session in Asia overnight. Not sure the Asian markets are so much waiting for jobs as they're trying to figure out what exactly is happening with the trajectory of COVID-19 in the region, as well as the China regulatory crackdown. We did see stocks in Japan higher, the Nikkei up about 0.5%, but we were lower on the CSI 300 in China and the Hang Seng in Hong Kong. The Hang Seng Tech Index under some pressure today, down more than 2%. This is a market that continues to look for the next potential target of Beijing's clampdown. Now there is speculation it's going to be vice companies, alcohol, e-cigarettes, after some reporting overnight. That took an e-cigarette maker, Shenzhen Jia, down 4.8% in the Asian session. In other asset classes, what I would note in foreign exchange is how much weaker the Philippine peso is relative to everything else, weaker against the dollar by about 1%. Bets that the central bank is going to cut that reserve ratio requirement, so it's weaker against the dollar and actually falling the most since 2020. And iron ore futures also were down substantially in the Asian session. On the one hand, you have China potentially cutting or curbing more steel production. On the other hand, the demand outlook is looking a little bit weaker. As for the picture here in the U.S., of course, it was tech that really led the charge yesterday. The cyclicals didn't fare as well, led the S&P 500 lower on the day, but S&P 500 futures are up about 0.2% in the futures session. In the bond market, we saw some whipsaw action on weaker ADP data, then stronger ISM services data, and Richard Clarida cementing the potential for an early 2023 rate hike. That leaves the 10-year yield unchanged at the moment, right at 1.19%. The dollar is weaker on the day, and then I would point to crude trying to rebound after 3 days of pretty substantial losses, Matt. Still, though, WTI is on pace for its worst week since April of 2020, Matt.
Wow, so a very bad week for oil indeed. Nonetheless, we're seeing gains for the most part across Europe this morning. Take a look at the DAX is only up 0.2%, but the CAC in France is up 0.5% right now. The UK, little changed. The IBEX and the FTSE MIB both gaining about 0.2%. So they're gains, but they're not huge. It is a huge day for earnings in Europe. We've got a ton of earnings news moving the biggest stocks to the upside and the biggest stocks to the downside. This one, Novo Nordisk, is good news for me. I've got a wedding in a couple months, and they've got a new weight loss drug called Wegovy. They say it's going to be a huge deal, and that more U.S. insurers are paying for it. You could lose up to 15% of your body weight, so I might give that a try. Siemens has raised its full-year earnings and sales outlook. Actually, Novo Nordisk, too. So these are both guidance boosts here. Adidas came out with guidance that analysts thought was a little bit too conservative, and they have a sales problem in China, a production problem in Vietnam, a sales problem in China. That's hurt Adidas. And then Bayer, you can see down right now. And this is an inflation concern. Bayer is seeing inflation really crimp its margins on the agriculture side at its Monsanto acquisition. So there's some up arrows and down arrows, but for the most part, Danny, it looks like the gainers are winning out in Europe.
Yeah, Matt, I was just talking with Novo Nordisk CEO about 20 minutes ago, and it's really interesting because he said, look, people are less likely to take weight loss medication if they're in the middle of a lockdown. But I feel like in some kind of perverse way, I wonder if that helps them going forward. I mean, here in the UK, I think the average was about 8 pounds that everybody gained during lockdown.
Yeah.
So, I don't know, it could factor into their outlook.
I think I added at least 15 pounds during the lockdown because I was taking weight gain medication called beer. So if I cut that out, maybe I won't need Wegovy.
But that medicine, just so great sometimes, you know? Can't help it. Anyway, Matt, now a look at what's ahead for today. At 7 a.m. New York time, the Bank of England's rate decision is going to be closely watched. Economists don't expect any change to rates. That's, of course, despite rising inflation. We'll also get second quarter results from COVID vaccine maker Moderna. That's before the U.S. market opens. And Fed Governor Christopher Waller gives a speech on central bank digital currencies at a virtual event hosted by the American Enterprise Institute at 10 a.m. And investors will keep an eye on Capitol Hill as the Senate finalizes language in the bipartisan infrastructure package. And of course, we'll be talking to our Jack Fitzpatrick very soon, Matt. But of course, that infrastructure bill certainly percolating around in these markets.
Yeah, absolutely. There's a lot going on in Washington around markets, a lot on regulation as well. Robinhood shares surged by 100% this week, closing at $70 a piece yesterday. This comes after a pretty disappointing debut last week when the shares fell 8% from the $38 IPO price. But it could be that we're seeing another meme stock. At least the action looks a little bit like that. Sonali Basak, Bloomberg's Wall Street reporter, joins us here on set for more. So what do we think about what drove, this doubling of Robinhood's value?
You could see it coming from a mile away. Robinhood actually guided in their S1 that they could become a victim of the meme stock frenzy. Plus, we know that options trading has begun. So those $70 calls in August 20th is what people had been buying the most volumes of. Let's see if this sticks. Some people might take some profits at this point in time. But as you know, Matt, the more people buy Robinhood, the more it shows the meme stock movement is alive and well. It's not even the biggest volumes yesterday.
Just when you think the retail traders are hibernating, they prove to you that they are not. And on the other side of retail trading, of course, there is Bitcoin. And that's as the Senate finalizes language in the bipartisan infrastructure package. Bloomberg's David Weston caught up with Senator Elizabeth Warren.
If people are going to be out there trading in it, there needs to be a cop on the beat. Because when there's not a cop on the beat in any market, then it's the small traders who get cheated. And that's what always worries me.
So, Sonali, Elizabeth Warren obviously talking about crypto. It seems everyone is talking about crypto, including JPMorgan Private Bank.
Yeah, it's interesting. They're working with New York Dig, which we know is the same company that's working with Morgan Stanley. The way Mike Novogratz has put it before is imagine tens of thousands of advisors across the United States selling Bitcoin, right? So that is something they expect to be giving a big boost to the retail base that's behind Bitcoin on top of the institutional base, where folks are still out there courting some of the largest. I've been told that sovereign wealth is really the last vanguard that they're seeing here in terms of big money that can flow into Bitcoin.
And yet Bitcoin still at $38,000. When can it get back to $40,000? Everybody wants to know, especially those Bitcoin bulls. Sonali, thank you so much for joining us. That's Bloomberg's Sonali Basak. Now to China, the country has imposed new travel and movement restrictions in an attempt to stop the spread of the Delta variant. There have been more than 500 symptomatic cases so far. Joining us for more is Sam Fazeli, Bloomberg Intelligence Senior Pharmaceutical Analyst. Sam, exactly how widespread is the Delta variant in China at this moment?
Hi, good morning. So obviously China has been much more effective in terms of closures, lockdowns, and methods that they use to minimize the spread. So clearly the virus is spreading, but it's nowhere near the sort of case counts per capita that we've been seeing in some of the other regions, even including the UK, I think. So obviously that all depends on the information and the data that they're provided. So it's not that bad, but they react very quickly, which is what's pretty impressive here.
Well, you mentioned the UK there, Sam, and obviously restrictions on quarantine related to travel are easing up in the UK. Is that a bad idea at this point?
No, I don't think so. I think most of the countries that are now on the amber list have got case counts per capita lower than the UK does. And, the previous excuse was the beta variant and all that, and they got that wrong. When you look at the data that they have obviously based their decision on, because there's no other way of knowing, which is the data that's submitted to this repository called GISAID, you don't really find a particularly worrying number of beta or lambda or anything. And frankly, I think it was the UK who was creating the problem in the first place for the rest of Europe with the Delta variant to start with. So I think that was silly, and I think they realized that.
Sam, thanks very much. Sam Fazeli. They're covering the spread of the virus for us, continuing to cover the spread of the virus for us. Let's get to oil right now. It's related. Prices had slipped for a fourth day. We saw Brent slide down through $70 a barrel for the first time in 2 weeks. You can see now it's back up at 70.86, trying to make a comeback. But as Kailey was saying earlier, oil is on track for its worst week since April of 2020. Let's get more with Bloomberg's Youssef Gamal Al-Din. Youssef, the problem is with the spread of this virus, with the Delta variant kind of re-emerging, it looks like that's going to hurt demand.
Matt, if there's one thesis that you could always go to for a bit of a reliable bet, it would be that the oil demand recovery in China is intact. It is working out over there. But now this latest set of numbers that we had from China suggests otherwise. The movement restrictions, they're rippling through the domestic economy. The usually busy streets in China, they're actually no longer as busy, down 30% in terms of the congestion compared to a week earlier. It's a similar story in Shanghai, according to data from Baidu. That's going to hit gasoline. It's going to hit diesel, key transport fuels. They're going to decline 10 to 20% from a month earlier. And then the negative news as well from Australia, Melbourne going into another lockdown. With all of this in mind, Bloomberg Intelligence argues it's a hiccup. OPEC Plus and their plans to release oil barrels back into the market over the next few months is not going to be enough to absorb the additional demand. And then at the same time, you have the caveat that we're seeing a broad decline in commodities and a stronger dollar. So that's something to bear in mind.
What are the key technical indicators that we should be watching right now, Youssef?
It is the shrinking of these time spreads. That's the code word for basically paying a premium for near-term deliveries. And we're seeing that with the WTI contract, specifically GTV Go for our clients on the terminal for that additional perspective. This is November over October. You're down to 43 cents a barrel from more than $1 a month ago. And the higher prices on closer deliveries, that's a sign of strong demand, better known as backwardation. But Vanda Insight says the EIA data, that did not deliver the important support on the supply side that this price really needed, guys.
All right, Bloomberg's Youssef Gamal Al-Din, thank you so much. Now from oil to stocks moving in pre-market trading, let's get a quick check on some of those. There are a number moving to the downside on earnings today. One of them being Uber, reporting a wider loss than expected because it's having to pay so much in incentives to deal with the shortage of drivers. That stock down about 3.9%. Also sinking even more to the downside is Roku, of course, a streaming company. Missed on a number of metrics in the second quarter, including active customers. Basically, people just aren't streaming as much with the world reopening. It's down 9%. And finally, Fastly also moving to the downside. It's an infrastructure software company. Apparently, there was a significant outage caused by a software bug that affected results in the second quarter. And they say that's also going to weigh on the third quarter and the full year outlook. So that stock plunging to the downside, Danny, down about 20% before the bell.
Oh, man, Kailey, a lot of movers to the downside this morning. I look to you for an uplift. We'll have to find some later, maybe. All right, coming up, a bipartisan duo is bargaining with the White House to free up billions of federal dollars for the states. We're on the latest infrastructure proposal next. This is Bloomberg.
We're getting good vibrations on the floor. And I think this weekend is likely to see us conclude the debate and voting on this measure as soon as the weekend, as late as Monday.
Senate Majority Whip Dick Durbin talking infrastructure with Bloomberg yesterday, feeling some good vibrations. Jack Fitzpatrick, Bloomberg government reporter, joins us now from Washington. So, Jack, we're waiting and waiting and waiting. The recess is looming. Talk me through the timing of when this thing is actually going to face a vote.
Well, I mean, you heard it from the majority whip. His expectations are reasonable expectations. At this point, when they take the final procedural vote before passage, that then starts a 30-hour clock. So even if they were to vote today to end debate, it would probably be Saturday before they could fully wrap it up. So it is looking like the weekend or early next week. There are a couple more amendment votes that are actually substantive amendments rather than, a lot of the things they've been voting on are relatively minor. There's one to look out for that would increase the flexibility of states to use previously appropriated COVID money for infrastructure. There is another one on cryptocurrency reporting requirements to the IRS, but really they are wrapping it up, and it seems like by early next week they could actually end up passing this in the Senate and send it to the House.
What's the story with evictions? I mean, obviously they've been working hard on this infrastructure deal for months. Evictions, they kind of, 2 days after the evictions moratorium expired, they were like, oh, we should do something about this. We propose something that is probably unconstitutional. So it doesn't look like it's going to get off the ground, does it?
Well, it could get off the ground and then blocked by a court, which was some of the back and forth there. There was a strong indication from the Supreme Court that they believed, or at least Brett Kavanaugh, who was the critical vote, believed there needed to be action by Congress to extend the CDC's eviction moratorium. The White House ended up announcing a limited extension. So we don't know yet if that changes things legally. But of course, we saw this with the Trump administration on the border wall. Sometimes you can see an opportunity to do something that is legally questionable to at least get things moving. And that, of course, poses the risk that there could be a broader pushback by the Supreme Court. Does this set a precedent that adds restrictions? Really, that is a significant unknown right now, but it's a way to kick the can just by taking this unilateral action by the executive branch without Congress acting.
We also had breaking news in the past 20 minutes that Biden was set to unveil an executive order that mandated, or at least set the goal for cars, 50% of them to be emission-free by the end of the decade. How have car makers responded to this initiative?
Well, we're going to have to see the exact details and see how much of this is encouragement, how much of this follows up on potential investment that we could see in future bills from Congress. And of course, the reaction to this kind of thing often is it's too much and too little. Keep in mind, environmental advocates would say that a 50% goal by 2030 isn't enough. But the latest numbers I've seen we're at about 2% of electric vehicles or emission-free vehicles right now. So that is a significant increase. But when the president makes that announcement, that's when we can kind of parse through exactly what it means. Does this need further work by Congress rather than just being an executive order in order to tell what the reaction is going to be in the markets?
All right, thank you so much to our Bloomberg government reporter, Jack Fitzpatrick, up very early for us in Washington. We appreciate it. And coming up later today on Balance of Power, don't miss this, a conversation with Senator Shelley Moore Capito, the Republican from West Virginia. That's at 12 p.m. New York time, 5 p.m. in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Danny Berger in London. Francine Lacqua is off this week. Now let's get the first word news. And the Biden administration has approved its first arms sale to Taiwan. It calls for selling 40 self-propelled howitzers to the island democracy, along with kits to add GPS to the shells the vehicles fire. The $750 million deal is almost certain to be denounced by China. New York Governor Andrew Cuomo is struggling to hang on to power. Cuomo stayed inside the executive mansion yesterday, a day after the state attorney general released a report outlining 11 cases of harassment toward women. Cuomo has denied that he will step down, despite calls from former allies urging him to quit. British Prime Minister Boris Johnson is calling for an investment big bang to drive the recovery from the pandemic. Johnson is urging institutional investors to put hundreds of billions of pounds into longer-term UK assets. His language echoed Margaret Thatcher's deregulation of finance that made London Europe's financial hub. And things Matt Miller hates to hear, it is getting harder to find single-family homes for sale in New York City suburbs. In some areas, contracts to buy houses fell last month for the first time in more than a year. That's according to appraiser Miller Samuel and brokerage Douglas Elliman. Signed deals plunged 36% in Westchester County. Westchester County, Matt.
Yeah, it's killing me. I have some appointments this afternoon in Bronxville, but there is very little that's actually on the market there. So it's like I have to either pay up or live here in Manhattan, which...
It's not so bad.
Yeah, I just need a yard and a garage.
That's fair.
Yeah.
Yeah,
Steve
Matt,
needs a
but I
yard.
want to know what is more difficult, finding reasonable rent in Berlin or finding a place in Bronxville?
Berlin is very reasonable and very affordable when compared with New York City or I'm sure London. So it's not a bad place to live. It's just gray 10 months out of the year.
I feel like most places are cheap relative to New York City, though.
It's probably very true. Yes.
And yet
Coming
Matt
up
wants
next,
to move back here.
Peter Chatwell joins us next from Mizuho International. He's the head of multi-asset strategy there. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London alongside Matt Miller and Kailey Leinz in New York. Francine Lacqua is off this week. Just checking out the market action from yesterday, the fourth most traded stock maybe isn't a surprise. It's Robinhood, of course, with 175 million shares changing hands. But Matt, I know you have a little bit of a bone to pick in saying that that was all fueled by retail.
Well, I was just reading Matt Levine's column last night, and I noticed that he found data that there were net buyers, retail buyers, of $19.4 million of the stock, but it traded a total of $4.2 billion during the session. So that's only 0.5%. I mean, even if you add in the retail sellers, it was only about $180 million in total of over $4 billion in volume. So maybe it means something on the margin, says Matt Levine, and I highly recommend you check out his columns on the Bloomberg. Just type N.I. Levine. But it's not all retail action, even if we want to think it is, because we like to, follow this meme stock story, and it makes a great headline. But I mean, institutional investors can, I guess, chase meme stocks too.
It also was way, way less than what we saw at the peak of AMC. For example, Vonda Research said that AMC at the peak, the 5-day rolling average was $600 million. This was only about $100 million from retail investors. But Kailey, come on, what else is going out there besides retail? I mean, this clearly, as Matt says, is not the biggest force in the market.
But retail is just so much fun to talk about, Danny. But yes, you are right. There are a lot of bigger players in this market as well, and they are driving European equities to another all-time high. The stock 600 up about 0.3% right now. And here in the U.S., it was tech that outperformed yesterday. The cyclicals lagging. And once again, NASDAQ 100 futures are in positive territory with about 4 hours to go until the opening bell, up about 30 points or 0.2%. In the bond market, they are trying to make sense of mixed economic data. You have strong ISM services, but a weak ADP print. How does that set us up for the payrolls report tomorrow? And what is it going to mean for the Fed? Right now, no movement in the Treasury market. We're sitting at 1.18% on the 10-year yield. And of course, speaking of monetary policy, we get the BOE decision at 7 a.m. Eastern time. Will they signal anything about the path forward of QE and tapering? Will they raise their inflation forecast? Something else I'm watching. Ahead of that, the pound is stronger against the dollar. The cable rate sitting at 139.07. And Danny, I have to apologize to you. I know that you were looking for maybe some positive movers, but I have to talk about more stocks moving to the downside. A number of them are related to e-commerce, one of them being Etsy, down about 13% in early hours. It missed expectations. Basically, the company is experiencing the fact that it pulled forward demand during the pandemic. That effect is now waning. And then you also have Revolve, another e-commerce company. It warned that COVID-19 is still having a negative impact in some of its regions, so that's taking the stock down 11%. And even a bigger plunge to the downside, 21% for Fiverr, which is also an online marketplace. It had a forecast that mixed expectations. And Uber, as we know, reporting a wider loss than expected, is having to pay drivers so much to drive. That's taking the stock down about 4%, Matt.
I actually took an Uber to the Etsy headquarters in Brooklyn over the weekend in Dumbo. And I saw where all the kids hang out and where all the trendiness is, and I don't need to go back. In any case, I have a great chart here that Dan Curtis put together for us, and it shows the sole active stay-at-home basket of stocks divided by the reopen trade. So it goes back to 2020, and you can see, obviously, stay-at-home stocks massively outperformed. And then when we thought reopening was happening at the beginning of this year, stay-at-home stocks underperformed, and airlines and hotels, travel stocks outperformed. Now it looks like it's turning around again. The question is, does the market have a concern that the Delta variant is going to lock us back down, maybe in a softer way? Joining us to talk about this is Peter Chatwell, head of multi-asset strategy at Mizuho International. Peter, is it looking like the Delta variant is really having an effect now on markets and on reversing the reopening trade?
I can see that there is some evidence of it on markets. What I differ with is the experience that we have here in the UK, and what I can see happening in other highly vaccinated countries, and therefore what I would expect to be the macroeconomic outcome, which is that I think the growth will be higher and actually higher than the markets have been repricing towards. And I think really what we should be focusing on is the two-tier nature of how the global economy will likely evolve. That there will be the set of advanced economies that are able to not just adapt and grow from having a slightly higher proportion of work from home activity than previously used to be the case, but also that we should expect more supply side disruption and weaker external demand due to the ongoing disruption that the more lowly vaccinated economies are going to continue to suffer for a prolonged period of time.
Yeah, Peter, because this is something the IMF has said as well in their forecast, that you have developing economies doing much worse than the developed ones, as you say, because of that differential in vaccines. But I have to wonder, at what point does that weakness that you're talking about in the developing nations start to filter through to the developed world, especially if it does hit things like supply chains?
Yeah, it's a very good point. And that's where the central banks are so important. They have to keep looking at these inflation risks and being tough and not reacting to them. If they're if they revert to their previous reaction functions, and if they tighten into them, then firstly the inflation is going to be stopped really just by developed market growth slowing materially, and then we'll be confronted with the reality of an extreme amount of money having been printed, but with it all being sat in savings accounts rather than being moved into velocity. So on the one hand, if the central banks fail to look at these inflation pressures but to view them as transitory, then we will have the policy error scenario, and that's what has been the main big change in market pricing, particularly in US Treasuries, over the last 3 to 4 months. And so
Peter, I'd like to ask you about that, because you say fair value for the U.S. 10-year Treasury yield is 1.55%, and yet here we are hanging out at 118 for reasons that no one seems able to fully explain. What do you think is causing that gap?
Yeah, it's the risk. The central banks do actually look at this risk now of prolonged supply chain disruption. You know, supply chains could well be disrupted for the next 12 months, and then that will feed into next year's inflation. Then they could conclude wrongly that this is no longer transitory, that it is going to feed into something more material. And then they could feel the need that they need to tighten monetary policy quickly. If they do that, just because of some major but prolonged but temporary supply chain disruptions, then they will effectively be locking major economies such as the US into a liquidity trap. And so in that scenario of a premature hike, our fair value for 10-year US Treasuries is 80 basis points for the end of the year and falling next year. So we don't think that is the most probable outcome. We assign a 40% probability to that. but it's still very important to recognize the dangers of an early tightening of monetary policy that could have on all asset prices.
You know, I wonder if we put too much faith in consumers when it comes to inflation expectations. An investor in Brooklyn over the weekend suggested to me that the fact that, 30 to 40% of the country doesn't want to take vaccines, even though there is some pretty obvious scientific data supporting the evidence that it's life-saving, tells you that you can't rely on these consumers also to make good decisions about inflation and prices. And so expectations could go off the charts at any moment. Is that a concern?
Well, it's not a concern because I think that that's the risk that the central banks and other economic actors need to be prepared to run. They need to see actually, well, the consumer, if they decide to bring a load of purchasing forward, they have the savings to allow it to happen in a sustainable way. So let it happen. But really, this turns into something much bigger if it feeds through into ongoing wage hikes. And it's that feed through into wages, which I think is what many political forces do want after having so many years of corporates generating material capital growth, whilst Labour didn't really get much richer
but not a
in
wage
comparison.
price spiral.
Right. So that's the key. Does it turn into that? In which case, that is durable, long-term inflation, which the central banks would need to allow to materialize, and then they would slowly need to tighten monetary policy into that. But if they
Peter,
do, if they go too soon, then it doesn't allow it.
Yeah, Peter, apologies, out of time. Thanks so much for joining us. Really great to get your thoughts this morning. That's Peter Chatwell, head of multi-asset strategy at Mizuho. Now, coming up, it's Bank of England decision day. The question all investors will be asking themselves, will the BOE be the first to taper trigger? Maybe not, probably going to stay dovish, but we are live from the BOE next. We'll take you to Threadneedle Street. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later on today, the CEO of Uber, Dara Khosrowshahi. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London alongside Matt Miller and Kailey Leinz in New York. Francine Lacqua is off this week. Now, the Bank of England's monetary policy decision is due out in just about an hour in London. No change to the 0.1% bank rate is expected, but officials may move a step closer to tightening monetary policy. Outside the bank for us is Bloomberg's UK economy reporter Lizzie Burden. So, Lizzie, just down the street from where I am at the moment, seems to be quiet where you are outside, but what exactly are we expecting from the BOE today? Will it be a quiet day?
Well, Danny, the doves are set to dominate today. We're expecting a unanimous decision to keep interest rates at 0.1% and on bond buying a 7-to-1 split, with Michael Saunders this time the sole dissenter in favour of paring back stimulus early. He takes the hawkish mantle from former chief economist Andy Haldane, and he could even be joined by Dave Ramsden, who's warned that inflation could reach 4% this year. Both of them would cite the spike in inflation past the bank's 2% target, the strength of the recovery boosted by the vaccine rollout. But they'll be outnumbered by the doves in there in the Bank of England behind me, who'll point to the 1.9 million people who were still on furlough at the end of June when much of the economy was already open. They'll point to the real-time indicators that show Freedom Day was a flop. People don't want to go back to the office for fear of getting pinged by the NHS track and trace app or actually catching the Delta variant of the virus. And they'll point to the idea that the last few miles of the recovery are going to be the hardest because the low-hanging fruit have already been picked. So caution's set to be the watchword out of the BOE today, in contrast to places like New Zealand and Norway, which are already talking about rate hikes.
But we could hear more, Lizzie, about how the taper is going to happen, right? Is that what we're expecting?
we might do, and this is the bit that could shake markets, we have to be ready for it. The bank's current advice is that it won't consider shrinking the balance sheet until key rate reaches 1.5%. But they could lower the floor because today the bank is set to introduce negative interest rates formally as a policy tool. Not that it will necessarily use them, but if they flip the order, making balance sheet retrenchment the key tool in a tightening, then you could see economists pushing back when they see their first post-pandemic rate hike. At the moment, markets are pricing 13 basis points of hikes by mid-2022. That could change today.
Lizzie, let's talk about the forecast. Maybe nothing will change on the growth side, but what about on the inflation side?
Yeah, they could. What will be really interesting is to see where the bank sees inflation peaking. All the MPC members have emphasised that this will be a spike that is temporary only. But if they raise the forecast, then a higher peak could be a sign that tightening could be needed sooner than is currently expected.
All right, Lizzie, thanks very much. Bloomberg's Lizzie Burden there talking to us about the Bank of England. Stay with us for full coverage and analysis of the BOE rate decision. That's at 7 a.m. New York time, 12 p.m. in London. You can be sure that Tom and John are going to cover that. This
and
is
Lisa.
Bloomberg. And Lisa, too. They'll all cover it. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz in New York and Danny Berger in London. Francine Lacqua is off this week. Now, one possible amendment to the bipartisan infrastructure bill is the one for cryptocurrency. Democratic Senator Elizabeth Warren spoke on Bloomberg yesterday to lay out what's in the works.
The way I think about this is that if people are going to be out there trading in it, there needs to be a cop on the beat. Because when there's not a cop on the beat in any market, then it's the small traders who get cheated. And that's what always worries me. So right now, for example, if you trade in stocks, you know that pump and dumps are illegal. You know that a broker has to come through with what the broker promised, and you'll be insured if the broker runs away with all the money. Those are things that are not there in crypto. So this is about putting some basic rules in place so that anyone can trade with just some basic confidence that the biggest kinds of scams will have a cop on the beat to blow the whistle and put a stop to it.
And that raises the question of who is the cop on the beat, or who gets to decide who the cop on the beat is? I mean, is it the SEC? Is it the CFTC? Do we need you up in Congress to tell us?
You know, I think that's a good question. And the answer is right now, we don't have any cops on the beat to speak of. And there are going to be, I think, a lot of different approaches. So Gensler is now talking about what the SEC can do, but there are other spaces for other actors depending on how you think crypto plays out, whether you see it as a currency, whether you see it as an investment. And that means you really put it back on Congress. So ultimately, I think it's important for Congress to do its job, but in the meantime, I think it's important for each of our regulators to step up and take hold of the piece that's within their jurisdiction.
So, Senator, you understand this area so well. From your point of view, give us a sense of what the biggest advantage, the biggest upside to cryptocurrency is, and the biggest risk to cryptocurrency.
Sure. So the biggest upside to cryptocurrency could be expansion or democratization of access to the financial system. You know, right now in the United States, we have tens of millions of people who are either unbanked or underbanked, which means they have to go to check cashers and pay 3% of their paycheck just to get their cash. They have to pay money in order to make a payment on their utilities or to pay their rent payment. And that's costing those people a lot. It is possible that moving to a digital currency system, or I should say expanding to a digital currency system, could bring in more people. And there are a lot of different ways that could be designed. The downside, of course, is so long as it's an unregulated system, you may be pulling more people in so that they can get cheated. And that's not what we want.
That was Democratic Senator Elizabeth Warren of Massachusetts speaking to Bloomberg's David Weston yesterday. Senator Warren obviously watching cryptocurrency, so let's find out what Tom Keene, co-anchor of Bloomberg Surveillance, is watching. He joins us now. Tom, what's on your mind this morning?
I got a buy limit order on Bitcoin at 42,000. I'm just waiting and waiting and waiting. What we're waiting for, Kailey, is a jobs report. Stephen Engler out with an important research note this morning on the potential surprise we will see. The markets worldwide price it in, and Kailey, where we see it, it's a small item today, but I'll go with it. The Swiss 20-year bond, that's my benchmark European piece, is breaking down, and technically it's got some real interest to it. If it was to move lower, it'd be a huge deal. Maybe it is a canary in the Zurich coal mine. Time will tell on that.
Tom, I'm glad you brought up that Englander note, because he basically says if we get the consensus print around 870, 875, that actually is bad news for the market because it means a more hawkish Fed.
Yeah, the issue here, Kailey, is the so-called standard error of the jobs report is ginormous because the American population is ginormous. I'm not going to do the math now. Matt Miller will hang up on me. But the basic idea here is, you know, there's some real mystery to this jobs report. And if it comes on plan or better, it could move the markets.
I've heard the standard margin of error quoted at something like 200, 250,000. And right now, as Kailey pointed out, the survey is 870. The whisper number is 900. How important is this for traders tomorrow, Tom, that we get something close to the number? And what could happen? Are the risks symmetric if we miss on either side?
I don't think they're symmetric. They're never symmetric, Matt, but you can't really identify that out front. What I would suggest is very, very important is what's the bet on the street right now. We'll explore that through the show this morning.
Yeah, if the number comes in too low, that also could be bad for the market.
Oh, listen to you. What are you doing? You're channeling Lisa Abramowitz. Come on.
Oh, I bring the gloom sometimes, Tom. Thank you so much for joining us, Tom Keene, co-anchor of Bloomberg Surveillance. Of course, he will be joined by Lisa and John later on, taking you through that BOE decision as well. So let's take a look at what else we're watching. And Matt, cars. Shocker.
Yeah, well, I mean, Biden came out this morning with an announcement that he's going to, I guess, demand or mandate that half of car sales in the U.S. are clean, at least at the tailpipe, by 2030. I guess you could still plug them into a literal coal mine to power them up. I'm not sure that bothers anybody under the surface. One of the best things for me about President Biden, and I'm sure you know this already, is that he drives, or he at least owns, a 1967 Corvette Stingray, the C2, which is my favorite Corvette. It's a convertible, green over tan, and it's obviously a big polluter, so I don't think he drives it that much, but maybe he could have it electrified if he needs to.
I didn't know that. Kailey, did you know that? Is this common knowledge?
I didn't, but now I have
Joe
a vision
Biden's car?
in my head of Joe Biden driving that car with his aviators on.
I was going to say he's definitely wearing the aviators in that vision, isn't he? Definitely. Okay, well, look, I'm watching far away from the White House this UK easing of quarantine rules, countries moving around from the amber list to the green list. Germany is on the green list now, Matt, if you want to come here and not have to quarantine. But I specifically am watching what's going to happen to flight prices because, guys, I am trying to book a summer holiday. I haven't gone anywhere. I want to be on a beach somewhere, and I'm kind of worried that with easing restrictions, I'm going to have to pay probably with my firstborn child at this point.
Operation Get Danny on vacation. We will all be rooting for you with those flight prices. Of course, I also am watching initial jobless claims data coming out at 8:30 a.m. We were just talking to Tom Keene about how important tomorrow's job report is, but every read on this labor market is critically important to the markets because it's important to the Fed. More Bloomberg Surveillance is ahead. Stay with us. This is Bloomberg.